Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, it's the eve before Thanksgiving, and here on the East Coast we're facing a massive snowstorm, which will obviously present challenges to everyone who is traveling to get together with loved ones. So we wish them safe travels. I thought today we'll do a recap. A couple of things have happened. One, Apple just topped the $700 billion mark for a company valuation, which is phenomenal. And I thought I'd give you some of our latest counts on the upside for Apple, because it is going to go higher. Maybe not right away, but it is definitely programmed to go higher. So let's take a look at the chart right now and see what we can come up with. What we're looking at is a close-only chart for Apple. And as you can see, we made a high right back here, and that's right around the $100 level. Remember that level? When we were 700, then we had the split. So the market came down, all the way down, and really stopped at this 55 level. Okay, so we can say 100 minus 55, that gives us 45. Okay, so if we see the breakout when the market broke over the $100 level, we'll say right here, we can say that technically we could see this market, Apple, going to the 145 to 150 level. That's our target zone for Apple based on just a simple technical analysis. And the technical analysis is really quite simple, because you're looking at going from here and measuring from this point to this point, which is 45, adding that to 100, and that gives you about the 145 to 150 level. So that's the target for Apple. Let's move on to our next market. On the other side of the coin is crude oil. Crude oil continues to evaporate. We're trading below $75, $73.58. We've been all over this like a blanket. We've been very bearish on crude oil, and you only have to look at our charts to show how bearish we have been on crude oil. This is our last signal right here, 86.57, and here we are, $13 lower. To give you some idea what that means in terms of cost, that's like a $13,000 profit on one contract. So we're doing exceedingly well in our World Cup portfolio. If you haven't checked that out, you may want to check it out, because it's doing very, very well. We see this market continuing to evaporate. There's no reason to step in front or try to catch a falling knife, as they say in trading. So just give this market some time and some room. 70 is the big next number that we'll be looking at. Here we are looking at a one-year chart of the NASDAQ. And the one thing I want to bring to your attention is right here, similar to Apple, as a matter of fact, and that is if we measure from the highs that we see here, right here, just draw a simple line across here, and down to this level here, approximately, which is 4,200, and we'll call this 4,600. So it's 400 difference. So we add that to here. I would say we can see the NASDAQ hitting 5,000. That's our upside target for the NASDAQ exchange. Similar pattern to NASDAQ, and that is here, right here. So we really broke out right around this level right here. And I'm going to call it 2,000, just to be very, very conservative. 2,000, and I'll call this 1850. So 150 points higher. So 2150, and I'm going to do 2,000, 2,200 would be the target we have for the S&P 500. Let's move on. The last market we're looking at is the Dow, and I'm just going to do the same pattern just right here, and the low right here, and we're going to call this 16.1, and we're going to call this 17.3. The difference between these two, 16.1 and 17.3, is 1,200. So we're going to add the 1,200 to the 17.3. That gives us 18.5. And that, my friends, is the target we have for the Dow Jones Industrials. This is Adam Hewison. This is our last transmission for till Monday. Have a wonderful and safe Thanksgiving with all your friends and family, and we'll see you on Monday. Enjoy.